Hey guys, I hope everybody's doing well because the markets are not. It's been about 10 days since I released report number 70, and it was pretty alarming to me because it was the first report that I've put out in a long time where most of the charts displayed bearish reversal patterns. I just wanted to run through a couple of those and see where we are today. But first, let's go through some of the news. Let's start with the Fed Watch tool. The next FOMC meeting is in 22 days. I believe that's December the 10th. Markets are currently pricing in. Oh, wow. Only a 45% chance for a rate cut, 55% chance for no change, 0% chance for a hike, where this is the range of the federal funds rate. Right now, we're sitting at a Fed funds rate of 375 to 400 basis points. And there's a 55% probability based on Fed funds futures that will not change at the December 10th meeting. Guys, I don't want to seem arrogant, but that's wrong. The Fed's going to cut rates because they care more about fighting unemployment than they care about inflation being a little sticky. So, anyways, let's move on. There's probably an opportunity there. We will go through that as we get closer to the Fed funds day. Aside from the uncertainty about the interest rate path, is the uncertainty about what the heck is going to happen with this situation. So the Epstein survivors are now releasing for the files, calling on everyone to demand for Congress. You may recall that Congress was previously arguing for the holding on to these files out of protection of the victims. So when I watch this video, I'm not sure you'll be able to hear it, but they say that there are thousands of victims. So see if you can watch this.
Urging Americans to make their voices heard ahead of that vote to try to force the release of the Epstein files.
There are about 1,000 of us.
Yeah. So, like I said, what is that going to do for the social construct of the country? What is it going to do for the legitimacy of our government, our ability to pay our bonds, our federal open market committee, the members? It just creates even more uncertainty. And that's all on top of the big bellwether. I just saw this report in the Wall Street Journal, but it's saying here are 6 charts that's showing you how much more we have spent so far in AI than what makes normal sense and how perfect everything has to go for the data center build out to equate to what it's priced in as today. So you can see here that the US data center build out status, planned build outs have now quadrupled anything that we've ever done before. There was one chart in here specifically. I'll share some of these with members, but here it is. These orange boxes in this chart, maybe I can do this. These orange boxes down here are the size of every Costco that is currently in existence. And all the other boxes are data centers that are planning to be built. Truly remarkable, truly remarkable. The CapEx we've seen go parabolic this year. We've seen companies spending like Meta, Google, Amazon, etc., go off the charts, breaking charts. And there's a total, I don't want to use the CJ word, but going on between these companies that seems a little fishy, to say the least. All right, let's jump into a couple charts. I thought this was interesting. It was released just today. Trump buys at least 82 million in bonds since late August. I actually saw that headline yesterday, but this Reuters report is from today. So if we were to go look at all the bond charts and get my ugly face out of the way, can see these head and shoulders bottom patterns forming in all of them across all durations. So the fact that Trump's buying bonds after this type of sell-off, he's anticipating the future Fed funds rates, the impact of lower interest rates, and our fiscal situation is totally disastrous if you could not tell by the price of gold. Okay, what else do I have that I can share with you? Solana, that's a big one. We were watching, December 2021 high all the way to the $6, $8 low in 23, 24. We caught the breakout at $20, 10x plus. Question if this is a cup and handle. The reality is that the handle is now a lot deeper than what we would be looking for in a cup and handle. It's rarely ever perfect, but it's worth calling out that handle is very deep at this point. If you want to see what I'm talking about, can look at gold. Look at how tight this handle was compared to a chart we just saw, where the handle goes back all the way 60% into the distance of the cup. That's way too much, according to Edwards, Maggie, and Schabacher, and how they define a cup and handle pattern. Today, another big down day, down 7% at the low of the days. That's pretty ugly. Here, it's a head and shoulders top. It's a head and shoulders top. And it's pretty close to a breakdown, depending on how you want to draw it. It's not quite a broadening pattern because these highs from 2025 did not take out the January 2025 highs, which means, Solana is down over about 50% year to date. That's horrible. All right, let's see if we can find another couple good ones. Now, this is interesting. This is the yield curve spread, the difference in the yield that you earn for holding a 10-year treasury versus a 2-year treasury. And for a 10-year treasury, you should earn a higher yield. It's longer duration than a 2-year. But when the yield curve inverts, hence the term inversion, that is no longer true. And then you have short-term debt yielding higher than long-term debt because the need for money right now is high. That's what you got ever since COVID through about 2024. Now we're coming back to normal, which means that long-term yields should earn higher than short-term. That's what this means. The 10-year yield is now earning 64 basis points more than the 2-year. If you go back and look at every time some bad stuff happened, it happens when the inversion comes back out to normal. And I've date checked all these. I put these little markers here. You got July, 08, 01. You've got COVID. And so what I was doing was I made point of the fact that most of the time it's not an issue until that spread is back to, normal or peak of the upper band bound area. We're nowhere near there yet. So I'm reluctant to say we're in the middle of the crash. I think a lot of the current correction has taken place because of earnings adjustments lower, which is healthy. I don't think we're in a totally systemic crisis like we were in 2008 or 2001 dot-com bubble. But I think that these charts, some of them shedding up to 50% over the last, whether it was 1 month, 6 months, or year to date, is actually meaning we're closer to the end of that disruption than we are the beginning. With that being said, let's look at this chart of the S&P. Not going to quite call it a head and shoulders, but our next line of support looks to be around this 6,500 or 650 level in SPY. There has been a consolidation since that high formed until today's candle price comes below, or until price takes out that November 7th low. Let's look at NASDAQ. Again, kind of looks like this, kind of business as usual, unfortunately, just a nasty correction. Oh, love this chart of BIIB. It is Biogen. And I can remember hearing about this company when I first started trading back in this area. And you can see why I heard about it. Look at that. So we've given all that back. We are back to pre-euphoria. And not only have we kind of held this weird, support area, but look at this on the daily chart. You can see just below the breakout area of all-time lows, get a head and shoulders bottom right here. This little cute pattern. With that, it looks like we're a couple days past a breakout, so I'm not going to go chasing this here, but if it pulls back, I could justify a buy signal with a stop loss, close up, but the pattern being invalidated below the right shoulder low would be the failure. So that's BIIB. So we had the broadening pattern in BTC. These are all ugly. That was not an inverted head and shoulders pattern. Let's redraw these lines. We're going to go broadening. And that's, guys, we're $10,000, $15,000 below. In my latest report, broadening pattern, put the target down at 85. I don't know what more you guys want from me. Let's read the report. 70 pages. 70 pages. You tell me if it's worth $10 a month. But anyways, all right, let's get back some charts. Everything's bloody except for Google. We had another broadening pattern in Google, just like we did in Bitcoin. The difference is huge, guys. The difference is huge. People are saying, oh, here's a broadening pattern that played out bullish. Here's a broadening pattern that played out bullish. Do you see the difference though? Let me show you the difference. Okay, look at this broadening pattern in CCJ. Look at this. Oh, great. Boom, broadening pattern. Look at this broadening pattern in Google. Great. Okay, broadening pattern. Great, great. Look at this broadening pattern in NVIDIA. Oh, great, great. That's great. Bullish. Now, let's look at this broadening pattern in Bitcoin. It breaks below the lower boundary decisively. None of the other ones do that. Look, you break out somewhere like here or here, right? I mean, clothesline, candlesticks. Ooh, that one's perfect. However you want to do it. Look at the other ones. They didn't break below the pattern line. It didn't come down here. It's not the same chart. So that's the difference in a broadening continuation and a broadening reversal. That makes my Bitcoin target close to 82,000. I have a thesis that a lot of the mining companies converting over to AI data center energy offsets, etc., is having a negative impact on sentiment in that space and on capital and liquidity in that space, in the Bitcoin space, that is. On the bright side, I spoke to one of my good friends at a mining company, and he shared with me that if anything, this is probably a good thing for miners because it will help with the difficulty situation, meaning that mining got crowded and players shifting some of their capacity over to energy generation for AI and data centers might not be the worst thing for profitability of those miners who stay focused on Bitcoin mining. Okay, let's look at one more because I'm a big Microsoft fanboy. Ugly stuff. So the one thing I noticed in this chart as well, I mean, when you look at the candlesticks, that is a very, very ugly kind of Twin Peaks, mountains we got there. That's not good. We've got a clear valley here. This is how double tops look on the bright side. That support level has held so far. But, Microsoft's one of the biggest, baddest, greatest companies in the world, but they've put so much money into this AI race that, a double top that sent prices down $100 a share could not surprise me. Too many dubs. That's what we'll do. All right, the first time that I got into GWW was down here, made a trade idea about it on TradingView. You can find my ideas, I don't know, somewhere in there. But been following GWW for a long time. They manufacture and distribute everything from metal detectors for airports and schools and universities, which have, clearly been on the rise lately, to construction materials and hardware. So looking at this chart, let's get back to the current. I'm going to ignore this because I showed the chart to Peter Brandt and he told me to ignore it. And now you've got this kind of coil building up here. It's a good chart. You've got a couple $100 of a range there and it might take another year to resolve, but it's something that I am watching. I've got my alert set. That's what you can see these lines are. I have absolutely no idea what to make of this chart. And with that note, guys, thanks for watching. I can't tell you how much I appreciate you following these videos. They've been really fun to make. Make sure you go to peterlbrandt.com and subscribe to ChartWizards Research if you haven't yet. It's the best deal for traders on the internet. Thanks again. See you next time.